On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's going on, everybody? It's your boy Reckless Ray Dinero, and we are back at it again with another bag talk. Today, we're talking about how I use debt consolidation within a fully invested framework, because I have made a drastic change in how I've been using these debt consolidation loans. Obviously, historically, I have always I've tried to use them since I started taking my finances seriously, started seeing a light at the end of the tunnel to acquire assets. And I always say everything should be to acquire assets. Unfortunately, even that, starting out, I was, what I would say at this point, doing it wrong. And that's because I would use those debt consolidation loans to pay off debt so that I could invest more, because then you have more cash flow coming in and you're looking at it from I'm investing what's left over. And so giving myself more active income to pay bills as they come in gives me a little bit more left over. And then it's like, hey, like the discretionary is just spend less, budget. And ever since going fully invested, that's kind of flipped on its head for me, with the exception of the debt consolidation loans. Now, Citibank and Discover every once in a while will send me checks. Citibank regularly sends me checks. I like Citi for that purpose. That's the reason Citi is in my credit card stable. When we start doing cleaning out that stable, we will probably be doing away with some cards and consolidating down those balances to move them into positions where they'll be more useful. But my Citi card, I love that card because it's the 2% cash back. You get 1% when you buy something, 1% when you pay it back. It's also a great balance transfer card. It's one of my favorite balance transfer cards. It was that and the Discover. My Discover card has yet to send me any more checks. They got bought out by Capital One, and Capital One, historically, none of my Capital One credit cards have ever sent me blank checks. Discover used to, but Citibank still running strong. They send me checks. They're like, hey, you got a lot of credit available. Hey, you want to use that? We'll send you some checks so that you can turn that into cash, which is awesome. And I usually do that because I like to manually distribute the money. This time around, I'm doing it a little bit different, and it's because I'm now fully invested. So I'm seeing the benefits of being fully invested, even though the debt, we're still working out within the framework how we're doing that, and I've figured it out. Within the framework of doing that, we've had the debt run up a little bit. We've also had some like random, obviously, car maintenance stuff come up, life things. And so it's not like we're doing a whole lot of spending, because like my spending for like clothes change. We're doing our spring cleaning, got a little bit of clothes coming in. You got to have a little bit of fresh clothes coming in. I think I spent like maybe $200. It's not thousands of dollars. I don't live lavishly. I don't really care about that type of stuff. It's not things that I necessarily value, so I don't spend money on it. And I have dialed back on car parts because we're going to be making some adjustments on that. So like I haven't been doing that either. We're just putting the money towards the maintenance. It's just maintenance on a BMW is a lot more expensive than my little Lexus hybrid was in the onset, to get it where I want it up to my standards. And obviously that's a little bit different than average Joe. If I was just changing the oil, it wouldn't be that big a deal, but it is. Gas is a little bit more expensive. Again, not that big a deal, but you know, it all adds up. And then when you have those big expenses stacked on top of each other, like life happens, it's what happens. But we were going to do, which prompted me, I was like, we're going to do one more debt cycle. And in doing that, it's like, okay, so you move as much of the debt into 0% interest positions as you can, and then chunk it down using the distributions. Citi gives me the check. I write myself a check after I got my balance increased. If you're not checking to increase your balances every year and updating your income every year within that, and updating your living expenses every year within that so that you can get the most out of all of your cards, you're doing it wrong. Just saying. There's no point in having credit if you're not gonna build that pool up so that it's usable. So what I did was I went and got my balance increased on my Citibank card, and then I wrote myself a check for $18,000. That is correct, 18 with 3 zeros. Oh, scary debt. Yep. And as it was sitting in the bank, I started thinking to myself, I was like, I'm fully invested, and I just wrote myself a check for $18,000, and I'm about to use this to disseminate out into paying off these credit cards. But that's the way Peasant Ray would have done it. And we're in a different system now. We're running a different system. And I was like, well, I'm not paying these cards until they're owed anyway. Period. Not doing it. So my initial thought was, well, if I'm waiting and the money's going to be sitting around, I might as well have it working. I can put it in STRC in my brokerage account and just have it sit in there and stack a little bit, give me a few extra shares of STRC. And then I was like, well, we could do that, or we could ratchet it up a little bit and put it into one of our lower performing but a more aggressive position and get it in the account. And I decided to go with that. So I started moving money over. Now, I didn't move all the money over because I try to force myself to dollar cost average, especially when I'm doing lump sums of money, because you don't know what the market's going to do. So I moved over $10,000. First, the initial $10,000. And then as I'm, obviously it clears out my margin. I was like, okay, so I'm going to leave the portfolio flat for right now. That's one of the things we're going to do. And then I started putting the rest of it into position, right? And I'm like, oh, wait a second. My margin balance is going to go way up now. Okay, cool. So I'm looking at the projections. It's like, okay, well, my projected income went up a little, gave it a good little bump, put me back in some ranges that I'm liking. And then I was like, oh, I have a cash balance because I can run back into the margin for what I had, and I can just track these numbers, and I can buy dips as dips become available. That's pretty interesting. And so I'm sitting there and I was like, I moved over enough, but I left out a chunk of it. So there's about $2,000. Well, and then towards the end of that week, I put in another $3,000 of the 18. So that's 13,000 in there. And that cleared the margin again. I used a little bit of the cash to pay immediate bills so I didn't have to pull out of the account, and then ran the margin down a little bit to make some moves to buy some dips. And I've got $2,000 left that I was waiting on a large purchase. So my SoFi loan, I was like, well, instead of dipping into the margin, I can not dip into the margin and just use this cash balance here to move that over. But I was like, that's going to be a few more days. And I wanted to see what my margin balance was actually going to be. And my cash available margin balance got shot up to $10,000. And I was like, okay, I don't have to take this money out of the account now. I was like, I can drag this out. I was like, I'll pay the minimum on everything, and then actually just start focus firing using the Cash App flywheel, because I'm going to have to pay that back in full. Redeploy that every time it comes around, which is every 5 weeks, and just start focus firing down my credit cards and just shifting them over into the brokerage and letting the dividends do their thing, which involves turning drip off on a lot of my on that position, because that position is going to be over collateralized now. But the thought process behind this now, the game has completely changed for me, because I was like, well, as I'm moving forward, while I am focusing on clearing as much debt as possible, specifically the stuff that's sitting in interest bearing positions now, I can do it a little bit slower. And I'm willing to pay the cost of capital to do it a little bit slower, to just not have to sell out of my portfolio to pay this down, because now the portfolio is kicking off in a range where it's going to be consistently taking chunks over the month of that margin down. And as long as I, keep things copacetic, paying off the daily driver, following the rules on that, but everything else, it's like, hey, we just need to maintain this and not put any more bills on here, and then pull it over in chunks. So what the plan is I'm going to pull over 50% at a time, because I don't want to max out my cash margin because market volatility. I'm going to keep it under 50% of the cash margin that they give me, which is only a portion of my portfolio anyway. So there's that. And in doing so, we'll be able to really dial in and focus on paying down that debt. We also have a cash available in our long-term holdings now, because we've gotten that over the metrics. So we're looking at that as well as an option of something to tap to kind of move the credit that's pulling interest as we're paying it off, just moving it over so that way it can auto deduct itself out. Also, as the margin, as we're running flat, as those payments come in, we can redeploy those payments against the margin pool of money until we pull our first payment over, which is coming pretty soon. But this week we should be able to do a pool. We'll be able to do a pool this week. And as we pull those credit cards over, obviously we're not running ourselves rampantly back into debt. Then it's almost like putting something down a garbage disposal. I consider it a debt garbage disposal, my income portfolio at this point. And we're allowing ourselves to continue to build. We still have the original margin that was in there. I am tracking that original number, because out of the $18,000, since we cleared the margin, that was deployable income, which I will redeploy because I technically owe myself that money at some point. Now, am I gonna flash fire it? No, we're literally using the majority of that to just buy dips in the core positions, our workhorses. Like, whenever our workhorses drop down $100, throw $100 in there, buy it back up, and then when it runs back up the other direction, we've got a little bit of cushion, hopefully a little bit of extra income coming in. And I'm feeling pretty good about it. So we've got that going. The way that we're functioning now, being fully invested, is everything just goes into the brokerage. Everything goes on the brokerage, and then we live out of the brokerage, which means that, like, as the brokerage grows, as that income portfolio grows, as the long-term holding grows, so does the available cash that I have available to withdraw to live off of. Now, I have more cash available than what I spend in a month, which is awesome. Like, that's a good space to be in. But honestly, like, if it wasn't for the consumer debt, as long as I had a couple of $1,000s in margin for the lifestyle that I lead, like, I'm not doing anything flashy, I could do 90% of what I wanted to do, as long as I had a couple of $1,000 to, like, float around in margin. Because with the income that I'm making now, technically speaking, the income that I'm making out of the portfolio right now at this point in the game, if I didn't have the consumer debt, I wouldn't need any of the other. I wouldn't need the margin at that point. That would just be extra. So that's one of the pivots that I'm making. That's how I'm using my debt consolidation. I'm using the portfolio for the debt consolidation. Now I've got it sorted out. I've got the system functioning in a fashion to where we're still keeping high income. We are actively especially with the chunks of money coming in, because I'm not putting the chunks of money into the ultra high risk degenerate stuff. it's going a tier lower. So now that we're above the $40,000 threshold in the income portfolio, like I said, I was going to dial that back off of 100+%. So now we're at 80 to 90% as the target, and it's dropping because the majority of the money is going into those stable deleveraging positions. Like, this is how we de-risk, because at a certain point, the portfolio, once we get these things going, a job won't be required because we'll be able to keep using those city blank checks after we pay that balance down. They'll send me more checks. I can buy more income, more Bitcoin. We're working on getting the Bitcoin flywheel set up as well, which is going to also help pay down the debt faster. And once we have those self-perpetuating mechanisms in place, the income generated out of the income portfolio can pay back the Citibank loans, the cash advances, can pay back the collateral loans against Bitcoin. And then every time it pays back, I still have that income portfolio. That income portfolio is still bigger. And I can just run that again and again, and as it grows. And with the end result of eventually getting to the point to where in my stable, I don't have to worry about it positions such as Stretch. You get $1 million in Stretch at 10%, that's $100,000 a year. Plus, I'm able to leverage it. And it's got $100,000 of just the Stretch position that's paying it back. So, like, as we get more money in there, we can focus on putting it into less risky positions. The volatility on Stretch is negligible, especially if you could dip into margin when you need to, and then the payments pay it back. So that is one of our goals. Our initial goal is to get 100K in there, because 100K, once it's compounding, we leave Stretch on drip. Once that starts compounding, getting to higher amounts comes a lot easier. Also being able to buy Bitcoin. This is going to be the first year where, hopefully, if we get some great performance out of our long-term holdings, which I am expecting, we're buying any and all dips. We're in a market right now where they're saying that we're going down, and I'm like, being fully invested, that just means we'll be getting up to 50% of my W-2 income going into my long-term holdings to get amplified Bitcoin exposure. I'm fine with that. We're also still buying spot Bitcoin. 10% off the top. I treat it like a retirement account, goes into spot Bitcoin. Spot Bitcoin can be leveraged as soon as we get that flywheel active. And by active, I mean once we get some money in the bank for the first turn of it. That's going to be a game changer as well, especially considering that we're in a phase of focusing on attacking this consumer debt, because that's going to be another big chunk of money that comes in that can knock out these credit cards and shift them over. And then we just pay those back over time and then redeploy those funds once we get to that point where those loans are paid down. That's going to be interesting as well. The main goal of sharing this is so that people start shifting their thinking. Like, if you're considering going fully invested, I've been tracking my journey. We aren't a year in yet, but I get more excited every month because I'm like, oh, okay, this is how this works. We're going through a bear market right now. I'm seeing a lot of opportunity. Being fully invested, I'm like, hey, I've got capital every 2 weeks coming in. Plus the flywheels that we have in place, such as the Cash App, which is about $1,000 every 5 weeks that we get to redeploy. We also have to repay it back, but that comes out of the margin. Margin's covering that. We also have the Citibank flywheel. Now, that's a little longer range one. It's about 10 months, 10, 12 months. It's a bigger flywheel, though. We're getting 18 times the amount of money. So, we get a big boost during that window of time. And then the rest of it's just managing. And now that we're using that flywheel and fully deploying it, fully investing it into our income system, it's almost like sky's the limit. Like I'm seeing the light at the end of the tunnel. I did the fully invested versus doing the standard American Dave Ramsey plan video last week, talking about, the comparison and the outcomes. Are there risks? Absolutely. You are accepting more risk. Do you have to be financially disciplined? 100%. Extremely financially disciplined, honestly. But once you change the way that you're looking at how money works and the way that it's manipulated, you start seeing there's only a handful of ways to get out of the matrix. The next video is going to be on going fully invested versus day trading. Because you're not trading your way out of the matrix, you're still plugged into it. Like that's the reason that we don't know. I know zero full-time traders. Like I'm guessing they all live in New York or something, but you're playing for scraps in a rigged market. So we're going to be doing a video breaking that down, because while it's a great way to get income to start up, most people trade till they blow their portfolios up, and we're going to talk about it. Because the end game on that, it's like, okay, so like, what are we doing? And that's the reason that people just talk about trading. They don't talk about personal finance, because they can't show you everything, because most of the time there's nothing. But we're going to get to that. That's going to be on next week's docket. I've got it listed. I'll be recording it. But for me, the fully invested system paired with the Bitcoin standard seems to be, in my scenario, what's going to get me out of that matrix of having to go to work or having to be tied to a computer to watch the markets all day, every day, because you have to be there trading. It's about having as little input into the system as possible. Like most of my trades, I make in the bathroom on my lunch break in about 5 minutes when I have to buy. About 5 minutes of work, maybe 30, a couple of times a week, because I'm not in the market every day. Do I look at the market every day? Yes, because I enjoy seeing what's going on. But the actual work piece of it, sit down with ChatGPT for an hour, do your research, have it assist you with your research, pick your positions, start projecting out what your income's going to be, navigate accordingly. Look at the paychecks come in a couple of times a week for your distributions, and then borrow money out of your margin to pay your bills. Pretty simple. Not a whole lot of work involved. And for me, that's one of the goals. It's not that I don't want to work. I don't want to have to work. And I do want to get to a space where there's actual freedom. I don't want to sign up into another system, because I'm not a TradFi guy. I don't like it. I don't like playing for scraps, which is why I pay other people to play for the scraps for me, because I don't want to do it. Like it's almost insulting. And also, I'm not going to be at the top echelon of it. So it's like, what's the point when you can just pay the people at the top echelon and you get paid? I don't know. But it's important to reframe how you look at other things downstream and go, hey, does this work within the system? Hey, will this boost? What's the opportunity cost of taking the debts consolidation check, getting that cash on hand, taking my 10% off the top like I usually do to go into Bitcoin or amplified Bitcoin exposure, which I did do. And then just taking all the rest of the money and just immediately paying off the credit cards, and then having to service the loan for the Citibank, and then, not having to worry about those credit cards, having them in an extremely low or no interest position, and not having it part of my fully invested system. Because technically speaking, since that money came in, it's taken us off of with that amount of it, like $1,000 or under, I'm willing to deploy that. The Cash App flywheel, I take my 10%, put it into amplified Bitcoin exposure, and send the rest of it to chunk down debt. I'm fine with that. But $18,000, like, that's a chunk of money, like a good chunk of money. So, you know, I wanted to play around with it and see what it looked like within the system. And seeing that amount of money within the system, I'm like, okay, like this makes sense. And I mean, I could go so far as to say that, well, we could bring the Cash App into the system as well and just flywheel everything into the system to just consistently be able to buy dips, boost the income. And we're going to actually, you know what? Now we're going to have to look at that because, I mean, all of this scales. So it actually is probably more beneficial for me to get it in the system because that would be chunking down the margin. So yeah, everything goes in the system. There's just no reason to deploy straight outside of the system if everything can go in the system and you put it in stuff that's marginable. That's going to be the play moving forward. So yeah, we're going to be shooting videos about all of the content. It's like everything needs to go in the system. It just makes sense. Like there's no reason to do anything else. It's not mathematically as efficient. You're just adding complexity and, you know, I want that margin number bouncing around a lot because I don't want to carry a sitting balance. I want to be paying down that balance because then I'm only paying interest for the days that I'm holding the balances. We want to hold as few balances as possible. So yeah, everything goes in the system moving forward. That's just what it is. I'm happy that I got to talk and rant to you guys and figure that out for myself. And we're going to keep documenting. Obviously, we do a bag talk every week. The crypto portfolio updates is what gets skipped if we're busy. And at my W2, we have been busy. So you're going to have to bear with on that. But everything's going to the Bitcoin standard. I threw my Metamask hoodie on over here for this because we're always, again, everything we're doing is to maximize our ability to acquire Bitcoin. So one of the first things we got to do is get rid of this debt. We also have to have income. Otherwise, I'm going to have to continue to go to work until I amass enough in Bitcoin to not do that, which is going to take much longer than 15 months. And I don't want to have to do that. So we had to figure out a way to bring some income in. And fortunately, the tools that are available now have given the ability to do that. And so that's what we're doing. Until next week, people, I hope you guys got something out of the video. I hope this sparked some creativity for you guys financially by me tracking my journey with my money. And I hope you're at least moderately entertained. Until next week, this has been another Bag Talk episode. The channel's Future Financial Strategies. I'm your boy, Reckless Ray Dinero, and I am out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.